Hello. Yeah, let's go. Let's go. Let's go. Let's go. Let's go. Hello. So I'm waiting for you guys to come. I think I see just one person. I'm waiting for the rest to come so that we can start. When you guys are here, let me know. Like Danny, are you here? You guys should let me know when you are ready. Just tell me that you are ready, then we can start. Are you guys here? Okay, I'm here now. I'm waiting for you now. So, should we get started? Let me know if we should get started, so we can just get started. We've wasted a lot of time already. I don't want anybody to miss out. I really don't want anybody guys to be down. So, you guys should send me your comment. Let me see. Just type start. Just type start, and I'll start. Yeah, bro. Okay. Yeah, I'm seeing just one. Like, where is Danny? This is you. This is Dave, right? So, Chris, Chris. Okay. Okay, where is this part two? So, like I told you guys, I said, remember I said something about this thing, type of break of structures that we have. We have the single leg break of structure, we have the double leg break of structure, and we have the multiple case scenario on. But guys, you guys like this thing, you guys don't understand it. You need to understand the single leg and the double leg before you can get to the multiple leg. So let's just start from the single leg break of structure. So this is how the single leg break of structure. Let's say a market is in um where's my practice? Okay. Let's say we have this market right now. It's going up, then we came down. You see, this is a single leg break of structure. And right here you have break of structure. Let me turn this into black because okay, so right here is our break of structure. So right here is our break of structure. Like I told you guys, right here is our break of structure. Here is our break of structure right here. So this is a single leg break of structure pattern because the market just moved. Maybe the market was coming down and we hit the resistance here and it just moved. This is a single leg break of structure. Single leg. There's no too many drama in the market. The market just came and did what it's supposed to do straight up. No drama, nothing. Okay. So that's a single leg break of structure. And we have the double leg break of structure. It's something like this. The double leg break of structure is something like this. Let's say the market is going up, came here, came down, and this first push did not go straight. Something like this. We have something like this before we broke structure here. So this double leg break of structure, and ideally people would think because you are studying, because I said break of structure is how will I say? Hold on, comment. So because I said this is a break of structure now. Now this is a break of structure, but this is the structure itself. This is just a mini pullback. So this didn't really break anything. So this here is the real break of structure they are waiting for. Do you guys get that? Hello? So do you guys get the single and the double breakup structure before I continue? Let me put it in writing. Single BOS. Okay, Danny, welcome. And double Danny, you're just joining us and you said no. Where you did double BOS. So let me just, for the sake of Daniel, let me just start this and start afresh. So, this is a single block of structure. We have a market situation here like this. The market is going, and we had this impulse move up. Like the market did not slow down. We just broke structure with one clean move. There's no this thing. We had just one clean move. So this is a single break of structure. As you can see, the market came here from here. We just broke structure straight. So that's a single break of structure. And we had this situation here where the market came, but instead of moving up, the market came, reached here, went down a little bit before going up. So this is a double leg break of structure because the market didn't just break the structure in one move. The market took two moves to break the structure. So it's just the single break of structure is when the market just comes and just break structure like that straight up without pulling back or anything. And the double is when the market have like the first pullback before breaking the structure. So do you understand? Chris, are you still there? Should I continue? Do you understand? Do you also understand, Chris? Yes, we can have a triple. We can have sometimes we can have like a mini break of structure inside this thing inside the market. So, but the main thing, the key that's going to give you the knowledge to know all the break is if you can successfully identify the single break of structure and the double break of structure, you would be able to understand the science behind the triple break of structure. You get. So uh let me just do an example of the triple break of structure. It's the same thing. We have the market going in down here into our area of interest. We have this first pullback, came another one here, came before we book structure. So this now is in the triple break of structure. You can see we have one first pullback, second pullback before we broke structure here. So we have 1, 2, 3. You get 1, 2, 3. There was no the lows are like the three like it's a three low. The market turned into like an how would I say it? It turned into an upper move. So that's what a triple break of structure is. Do you understand? Yeah, this video it will be on this thing, it will be on YouTube. So you can just like when you enter my page, just go to streams and you can be able to watch it. Yeah, I'm looking kind of waiting for this and waiting for the rest. Danny, I'm waiting for Chris and Teddy to tell because I don't want this situation where I don't want a situation where we just go and they'll stop me to come to this and to repeat it again. I won't be able to do that. So, and I want us to finish this topic today. I want us to finish the legs of break of structure and the area of interest. How to successfully identify an area of interest. So I also want us to finish that. So Daniel, looks like should we continue? Hello. Okay. So let's continue. So this do you understand the break of structure? Do you understand the legs of break of structure, right? Do you have any question? You guys should ask your question now because this is the right time to interact. When I send you video, I can't interact with you, but when we are together now, you can ask questions and I can just tell you straight what it is. Yeah. So don't worry, she'll listen, she'll come back later. Do you understand? Like, do you understand exactly? Okay, so this after identifying this, then we have the point of interest. Like, looks complicated. If you don't understand, like, what exactly is complicated about it? We'll still go into the chat. I'll still show you. I'm just showing you the theory of it. Okay, so we have like this thing. We have the point of interest that I'm this thing that I'm going to mark out now, and this a point of interest is simply an order block. Let's say we are bullish. Let's say we are bullish, right? Let's say we are bullish. This is a bearish movement right here. We are moving here. The last bearish candle that was responsible for this move to come and break structure. Like if you listen, if you have a note beside you, write it down. For a point of interest to be valid, it needs to break structure. You get it needs to break structure. It's not just the last candle that pushed price up. No, it needs to be responsible for breaking structure. So on a single leg break of structure, the point of interest is the last candle, the last selling candle or the last buying candle, which is an order block that was responsible for breaking structure. Do you understand? Okay. So the point of interest is where, okay, let's do it like this, is where sellers, let's say we are selling. The point of interest is where buyers come into the market that start buying and takes out this high right here. You are still like when we get inside the chart, you are still going to see what I'm saying for a fact. But I just want you to have this in your mind that okay, do you know what an order block is? Yeah. Order block. You don't know what an order block is. I didn't tell you to watch order block on my previous listen. That was the first thing I told you guys. I told you guys to watch the video on order block and fair value gaps before we even start. That was the first thing I told you guys to go and watch. Chris, do you understand? It looks like Daniel did not. Looks like Daniel did not watch the videos on order block. But I believe Chris, you understand. You know what order block means, right? No, it's not heavy buying or selling. Order block is an area where the market stop moving in that direction and just change. Like the last, I told you, the last selling candle, the last selling candle before a buying power enters the market. Go back to that video and search order after this class. Go back to order blocks and look for what an order block is. Okay, so in a single break of structure leg, we have 1 point of interest, and this is very important. In a single break of structure leg, we have 1 point of interest, just 1 point of interest. And in the double break of structure leg, we have double point of interest because this right here is responsible for this whole move that broke this high. And we have another point of interest here because it was also responsible for breaking this high. You get it? So we have 2 point of interest here in this double leg break of structure pattern. We have 2 point of interest. The first one that pushed price and the second one that pushed price to break structure. So this one broke this mini structure inside the structure, inside this overall structure. This one broke this structure, and this one was responsible for this whole move that broke the real structure that we are looking to break. Do you understand? Okay, so we have in the single leg break of structure, we have just 1 point of interest. In a double leg break of structure pattern, we have double point of interest. You get, we have double point of interest. If it's a triple leg, we have 3 legs and 3 point of interest. You get. So do you guys clock that? Do you guys understand? Before I move on, do you guys understand? I'm not going to be talking about this anymore. Like, do you understand? If you don't understand, let me know now so I can repeat it before. Because if I move on, like I was talking about any this in another thing else. Okay, so you understand in the single leg, we have a single break of structure, double leg, double break of structure, triple leg, triple break of structure. So single leg, we have 1 point of interest, double leg, we have 2 points of interest, and triple leg, we have 3 points of interest. And if you don't understand what an order block is, go back and go and what an order block is properly. So if you understand what an order block is properly, you understand why I call this place point of interest. So now, single leg, we have 1 point of interest. Yeah, so if it is 4 legs, you'll be looking to have 4 point of interest, but it is really when it is 4 point. I'll still tell you guys like it's I'm giving you guys the puzzle the exact way I want you guys to understand it. So after the end of the last video, you would be able to understand from like how to do your market analysis from the higher time frame to the lower time frame down to your entry model, what you are looking for to enter. How now we are talking about market structure, and that's very very important because like if you understand market structure, when you come into the market, you already know that this market is buying, so we are not looking to selling. Knowing that alone, you've outperformed 50% of the people. Even if you don't know how to enter yet, you already know that this market that I'm looking at today, the structure is bullish. So I have no business trying to sell this market. Now, when you look at the structure and you see that okay, we have a single leg break of structure, we have a double leg break of structure, we have a triple leg break of structure. That automatically has gotten you to like 70% of performance above everybody. You already know what you are looking for. Now, all you are just looking for is just to know how you can enter the market and scale down. So all those things I'm going to give you guys piece by piece, but I'm not trying to rush you guys. I'm trying to just give it to you piece by piece. So at the end of this, you would be able to know how to identify the trend, look for your entry model, and when price comes to your area of interest, you'll be able to know exactly what you are looking for. The entry confirmation that you are looking for on the lower time frame, you will be able to know it. So the rest will just be your psychology, and we can just walk through that. You get? So do you guys understand? Can I move on? Daniel, what's the problem? You don't understand. Okay. So yeah, so let's just move to the chat and let me show you the examples that I'm teaching. So because what you guys were identifying, it was totally rubbish. Like you guys still don't understand the concept of break of structure. Yeah, you guys still don't understand the concept of break of structure, and that was the whole point of the first lecture that we had, that you should understand the concept of break of structure. It's okay. But yeah. It's rubbish. It's not like totally rubbish, but it's not like that's not what I need from you guys. But you're not going to get it just in one listing. Like even after I teach you everything, you still need to backtest on your own, go into the chat, ask questions. When you're not asking questions, it shows. Yeah, sure. I will identify it for you guys now. So like when you are asking question, like when I teach you something and you go and you ask question the next day, it shows that you're actually backtesting and you are looking for information. It shows that you're learning. But when you're expecting me to just okay, tell you what's next, tell you what's next, it just shows that you're not serious, you're not into the craft. And trust me, in trading, if you are not obsessed with it, you're not going to learn anything. For real, you're not going to learn anything if you're not obsessed with it. You need to be obsessed, you need to ask questions. And when you have questions, it shows that you have a direction that you are going, you have an approach. And when you ask question, when you have answers to your question, you'll be like, yeah, okay, yeah, this is the reason why this is like this is the reason why this is like this. You get? So by just looking at this chart right now, let's just start here. By just looking at this chart right now, what type of trend are you looking at without even using break of structure or anything? Like what type of trend are you looking with this just little thing that I introduced to you guys now? With this just part that I'm showing you, what type of trend are you looking at? Okay, that's not. It's not a consolidation, Daniel. It's an uptrend. Like it's an uptrend. Look here. See, it's an uptrend. You see, price is going up from here. So this is an uptrend right now. You see this consolidation is happening inside an uptrend. So it's not a consolidation, it's an uptrend. Okay. So this I'm trying to look for, yes, just hold on. I would okay. I have a beautiful price action that we can actually listen this GJ price action. It's a beautiful price action that happened during last week. So we could yeah, so this is the GJ price action. And so this, let me highlight the price action that we're going to be studying. I hope you guys can identify the change of this change of character and break of structure. You guys can identify that, yeah? Okay, good. So in this um in this series that we are looking at right now, this is an example of this is an example of a single leg break of structure right here. Single leg break of structure right here. You see, this is a break of structure. You see, right here, this is a break of structure right here. Let me mark it out for you guys. You see, this is a break of structure right here. So, where is our order block? Before we broke this structure here, we had this selling momentum. Selling momentum. So, we had this selling momentum. Okay, after we had this selling momentum, this candle right here, this is the last selling candle before we start buying, before buyers start coming in. You get? So this candle, this is our point of interest. That is the order block. This candle is the order block. You get? This is the order block. So this is the order block or point of interest. Do you understand? Okay, so you guys will see that I'm on 30-minute time frame. On this 30-minute time frame, I only take trades on 30-minute time frame, 15-minute time frame, and 5-minute time frame. I already know my trend. I already know, like I told you guys should identify your trends on the 4 hour. The minimum place you go to identify your trend is the 1 hour.
So when you know your directional bias already, when you know where price is going already, that's when you drop down to the 15 minutes, 30 minutes, and 5 minutes. When if you don't know where the price is going, you have no business looking for where price is going that day on the 5 minutes. You are going to be stopped out a lot. You need to know where price is going on the higher time frame, on the 4 hour time frame, on the daily time frame, even on the weekly time frame. You need to know where price is going. After you know where price is going, then you drop down to your execution time frame, which is the 30 minutes, the 15 minutes, and the 5 minutes. Those plays you are going to be looking for this kind of setups that you are going to be taking. So this is a break of structure here, and we have another break of structure here, right here. We have another break of structure here, and this break of structure, which candle was responsible for pushing price to break structure? We have this candle right here. You get, we have this candle here that was responsible for breaking structure. You get, so it's a single leg break of structure, and we have another break of structure here. We have another break of structure here, and this break of structure, which candle was responsible? This last candle, this last opposing candle. Remember, we are in an uptrend, so our break of structure, our point of interest should be a selling candle, the last selling candle. You get, so that is how you can identify a, a break of structure successfully with a point of interest. Any question? Okay, good. So now, when you I want to add one piece of the pie for you guys. So when you identify these structures, and you want to take there's something we call this in daily range in trading. So let's say I want to buy right now. I'm a buyer, I'm looking for buy. I already know my bias. My bias is buying. You see from here, this leg right here broke this structure. So you see from this range right here to the top of this range, I'm expecting price to come back and fill this here before going up. So this is my drilling range from here to here. Let me mark it out for you guys. So this is my drilling range from here to here. This is my drilling range because this is where I will be looking to buy from. If price should come and break below here, then my bias is strong. The market is still selling, so I will not be buying again. So the market is coming down and it broke structure to my direction. So the last candle that was responsible for breaking that structure till the very top at where price stopped, that is my daily range. So any retracement downwards, I am looking for an area where I want to buy from. So whenever you are trading, whenever you want to trade, you always make sure you have a dealing range. And what that dealing range is, that if price should break that dealing range, then your bias is wrong. You don't need to sell or buy again. You would wait for price to give you another break of structure and another dealing range before you enter. Okay, so this is the dealing range for the other one. You see this last candle and this one, from here to here, this is my dealing range here. This is my dealing range here, from here to here. As you can see, this market did not break below here, because if it should break below here, it's I'm probably wrong. But in this scenario, okay, so this is the dealing range from here to here, is the dealing range. And we broke structure. This was responsible for breaking structure here. So this is the dealing range of this particular structure. This is the dealing range of this particular structure. It's not daily range, it's called dealing range. Dealing, like when you are dealing something. Yeah, dealing range. Yep. Yeah. That's it. That's the word, dealing range. So how many things have we spoken about today now? I want you guys to like tell me what we've spoken about today. What have we spoken about today? We are not ending yet. Like, what have we spoken about? You guys should analyze it. Like, what have we spoken about? Okay, point of interest, dealing range. Okay, the dealing range is just an area where you are looking to take your entries from. An area where you are looking to take an entry from. So the dealing range is your point of interest to the break of structure. So that's an area where you are looking to take your entry from, where you are looking to take your sales from. You see all this you see all these were trades that I took last week. All these were trades that I took last week. But if I start breaking down why I took this trade for you guys, it's going to be another thing. Like, you guys are not ready for that yet. Like, you guys will understand when we start talking about entries. You get, when we start talking about entries, so you understand that. You guys have still know I this in point of interest, dealing range, order block, and what. change of character. Okay, remind me later when we like when I'm done on this. Okay, so this is the let me just show you now. You see this, you see this market was moving down like this. This market from here was moving down, right? Was moving down. So any break here is a break of structure. Any break here is a break of structure. So the first break that counters the trend, yes, the first break that counters the trend, that is the change of character, because the character that it was printing before was breaking structure down. So the character that it was printing before was selling this in character. It was breaking down, breaking down, breaking down. So, and you can see while it is selling, it was not breaking above the highs. It was just taking the lows. You know, it took this low, took this low, took this low, and took this low. But after taking this low, we came and took this high. And that's the first violation in the market. So that's the change of character. It has changed its previous character. But that's just an indication, and just an it's just an indication that okay, price is ready to start buying. But because the reason why I took this trade, if this was on the higher time frame, I wouldn't take my buys from here, because I still need this break of structure, this second break of structure, to finally confirm that I can now buy. If I was selling before, if I was following this momentum before, we have this change of character, I would wait. I'm not going to do anything. This dealing range is just to observe for me. So the market might just take this and come and break here and it will keep selling. But if we break here and this dealing range holds, then that's a reversal. So that's a reversal. Then the second break, that is the break of structure. So the first break, the first break, the first break, so see this market right now, Daniel. See this market right now. We are going down, right? And the market is breaking structure downwards, taking out the previous lower low, taking out the previous lower low. So the trend is obviously bearish. But the market came here and wants to start buying. So this first break that violates this area shows us that this market is now indicating that it is probably not going to go below here. So that's the change of character. That's just an indication. It's not telling you that it wants to start buying. It's not telling you that it has changed the trend from a bearish trend to a bullish trend. It's just indicating the possibility of the change of character. So what would you do in this situation? You just wait. You wait for the market to come down and respect this range. If it respect this range and break outside again, then that's the second break of structure. Now you have the confirmation that the market has changed the trend. Now it is in an uptrend now. So what you will do now, you'll be looking, you identify the second daily range, and that place is where you are going to look to take your buys from. Do you understand? And you understand it like once you backtest it, you understand it. Like it took a while for me to understand all this stuff, and I didn't really get. So you understand it when you back, at least you like this is the first time now, so the video is saved. You go back, watch it, watch it, watch it. By the time you watch it like 3 times or 4 times, you understand and you can be able to identify it. the most important thing I want from you guys is that, like, don't just like rely on what I'm just teaching here. When I teach you something here, for you to fully like have the confidence in it, when I teach you something, you go to YouTube and type, okay, okay, this is me teaching you a point of interest. You go to YouTube and type what is point of interest. So if the same thing I'm teaching you is the same thing you are saying, then you understand I'm teaching you the right stuff. You get, I'm not just bullshitting you guys. I'm teaching you the right stuff. So that will build your confidence in actually following what I tell you to do. You get. So when I teach you something, you go, you do your research, you back test, then you come back, you go into the chat. You see the way I'm analyzing. This same way I'm analyzing. That's how I want you guys to be analyzing. Analyze the trend, the break of structure, the change of character, point of interest, order block, the daily range. I want you to mark it out on the chart for me so that I can understand that you are following me. You get, I can understand that you are following me. I'm not just wasting my time, because if you are not following me, there's no point in actually teaching you guys, because I have a lot of things that I am supposed to be doing. So I need to know that you guys are following me so that I can have time to actually teach you. I need people that actually wants to learn. You get. All right, good. So we've spoken about the legs of breaks of structure, the single break of structure. Are you guys like, are you guys even writing, like, do you have something that you're jotting down, that you're writing down? What we've spoken about the single leg break of structure, the double leg break of structure, and the triple leg break of structure. We've spoken about change of character, break of structure, point of interest, order block, daily range. You guys are supposed to write it down. So like after this class, you go back, go into your chart, give yourself, like, just get busy with yourself. Get busy with yourself and try to identify it. Okay, now I know this. Yesterday I didn't know this. Now I know this. So you're having the puzzle, you have it a little bit by little bit. By the time we complete the mentorship, we complete everything. Now I'll just show you how to put everything together. And once I show you how to put everything together, you just need some few things. Now you know what you are looking for in the market. You are not lost when you open the market. You are not someone that is just guessing. That's the whole point of a mentorship. You are not someone that is just guessing. You are just coming straight to the market with the knowledge of what you want to do. Now it depends on you. You like, now the only thing you need is your market experience, because you still need market experience. If I pour everything that I know for you guys now, if I pour it everything, I give you 100%, you still need to face the market for another 6 months before you can have that confidence in yourself, because you can be, because strategy alone is not enough. Strategy alone is just like it's just, let's say, 20 to 30% of trading. Your psychology, like building a system and actually trusting that system, it's what's going to determine like how long it takes for you to be profitable. But yeah, I'm going to teach you guys how to trade. I am going to teach you guys how to trade, and I'm going to guide you on how to execute. After this class, I will put you in a group where I will share my trades and ideas with you. And it's an open group. I won't be the only one sharing. You guys can actually share your setup, and if there's any correction, I'll correct you. I'll share my setup with you where I'm entering the trade, where I want to enter the trade and everything. And even that, I think I've been sharing it already on my YouTube. I have this series called Pre-Market Analysis, where I just put video every day about what the market is doing right now and what I'm anticipating for the market to do. Yeah. I get. So can we move on now? Let's get into the single leg. Let's get into the double leg break of structure. So another listen, another sharing for you guys. The market has market structure itself. It's not I like to call it, the market has three market structures, you know. We have the the mini market structure, we have the macro market structure, and we have the main higher time frame market structure. So the market structure on the weekly and the monthly time frame is different from the market structure that you see on the daily and the 4 hour time frame. And the one that you see on the 4 hour time frame and is totally different from the ones that you see on your 30 minutes, 15 minutes, 5 minute time frame. So your job as a trader is to know a situation where we are in a pullback. Let's say the market is trending up on the higher time frame, and now it has gotten to an area of resistance on the higher time frame. Then you drop to the lower time frame. What are you looking for? You're looking for the change of character and the break of structure for you to actually follow that pullback. But in your mind, you know that this market is overall on the higher time frame is bullish. It's just pulling back. So you know that okay, the market is pulling back now, the market is expanding, the market is ranging. That's what market structure is all about. And if you know that, there's no way. Like ever since I learned, like before I used to trade ICT. I used to trade power free. I used to trade what's it called? I used to trade the opponent breakouts, like all those are just bullshit, like real bullshit nonsense. The only thing you need to be profitable is pure price action, like looking at the price action and knowing what it wants to do. That's why I don't trade with an indication anymore. I don't use indicators. Before I used to use indication, but now I don't use indicators. I just go on my chart, on my naked chart, and like read what the price is telling me and follow the price. It's very, very simple. Trading doesn't get like doesn't get more simple than that. Just pure price action, and that's it. Well, Danny, I'm laughing at you. So this is a double break of structure. See a double break of structure here, and so this is our point of interest. The market was going down from here, like, down, and the market come here, was coming down, and the market came here. The market came here. Before I go in the structure right here. This is a double structure. Is the life still shaky? That is our point of interest number one. Yeah, can you guys hear me now? Is my voice still cracking?